All right, hello, this is Mike with NetPicks.com and the Options Mastery Program. So I want to take a few minutes to walk through some trades that we closed out last week. A pretty interesting week last week with some pretty big swings back and forth in the overall market. And as you'll see in a few moments, it was very close to being a phenomenal week for us. Still very profitable. We had some really nice winners. And as you'll see, we had a number of trades that were very close to breaking down towards some full targets for us. We eventually got taken out at break even. So we'll walk through those charts in just a second. I also want to just talk about the market as a whole as we get ready for next week. What am I looking for personally, and so some key levels that we'll need to keep an eye on. Earlier last week, I did record a video, and we looked at what we call our market overview charts. These are the three major U.S. index ETFs, SPY, QQQ, and DIA. These are just the daily charts that I look at to try to stay up to speed with where the market's been, where it's headed. I do not base my trades off of these daily charts. It's just for me, a way that I can try to get a feel for overall direction heading into next week. So this is SPY. I will point out this is Thinkorswim. If you are a Thinkorswim user, they did come out with a pretty big platform update over the weekend. So if you've not done so already, make sure you get in there, get the new update downloaded, and make sure all your charts are correct. The color scheme is going to look different. You may have to go in and play around with some of the background colors and things like that. I'll be recording a video in the coming days that'll walk you through some shortcuts and how to get things positioned the way that you want them. So here on the daily chart of the SPY, going back into last week, I talked about how we were seeing the low volume bounce to the upside. We were seeing some volatility back and forth, but we had worked off some of the extreme oversold levels here. Okay, and we bounced up and we started to test some of these clusters of moving averages up above us. We talked about price action getting stuck around that 50-period exponential moving average. Stalled out there, and we've moved to the downside. I talked about some potential targets on the downside, some potential support levels that you'd want to keep in mind. We always talk about the 0.50s and the 0.00s, so I'm talking about 192.50 and 192.00. Those are oftentimes areas where traders will look to look for support and resistance for moves to stall out at. I also mentioned some swing levels. Again, we drew some lines on the charts, and notice where price action found some support here during Thursday's session. Okay, right at that swing low. That was back from September 1st. Okay, so that's why we look at those swing levels, especially on the longer term time frames and especially on the index ETFs. Okay, these products really respect those technical levels well because there's so many traders looking at all of these same levels. So I want to see that level broken if we're going to get some follow through on the downside. We're going to need to get that level to break there. The level's currently right at 190.70. Down below that, it really becomes clear sailing. I would love to get back down to the lows from late August, right down at 182.40, but we've got our work cut out for us to get to that level. It is good to see on these moves to the downside where volume does start to pick up. It makes it just so much easier to get in and out of trades at good prices. Okay, you get back into that V-shaped rally, the move to the upside, the volume just disappears, and we've seen that over the past couple of years. So for the sake of good trading, I would like to see this move to the downside. If that doesn't happen, if we do zoom back to the upside, we'll work around that. We'll work through it. I want to see follow through for longer than a couple of hours at a time. Okay, it's been one of those markets where you get the big moves early in the session. In the case of the downside moves, we've seen the buy the dippers step in and take us right back up to the highs. When we get these moves to the upside, it's been difficult to get sessions where we close near the highs of the day. Okay, we've just got a lot of uncertainty right now. So I really want to see that swing level broken just below us. Again, 190.50 to 190.75, that's going to be a key level that I'll look at here earlier in the week, next week. Over on the Dow ETF, very similar story. We did find support right at that swing level, right around 160.00. So that becomes the next key level that I'll be watching as we start the week. Haven't seen any big news out over the weekend that could potentially cause some big opening gaps on Monday. The big catalyst that could get that to change is to see how Asia opens tonight, how Europe opens overnight. We could potentially look at a big gap tomorrow morning, but so far, I just haven't seen any big market news event over the weekend. So up above us, we still have those moving averages, those 20-period simple and exponential moving averages right up above us. Those are the areas of resistance that I'll be looking at. So we'll pick it up early next week and see how the market responds to some of these levels. Over on QQQ, okay, we've got this level right around the 100.50 level. If we do get a break to the downside early next week, that'll be an area that I look at for support. The Nasdaq, notice how all of those moving averages just above us, notice how tight they're getting. They're all right on top of each other. So I'm not saying the market can't move to the upside, but the bulls are going to have some work cut out for them. Okay, we need to get all of those moving averages to break on some decent volume. Okay, now over the next couple weeks, we are going to head into earnings season, so potentially we could see that happen, but we're going to have to see some conditions change. Going back into last week, what I saw intraday on most sessions, I saw some very mixed internal readings. Okay, so when we looked at volume numbers, we looked at the tick readings, the advanced decline line, the VWAP on the 5-minute chart of the S&P. Those are the internals that we've looked at in previous videos. We did not see those strong-looking internals on the moves to the upside. Okay, and on the downside, we didn't get the internals to stay weak for very long. Okay, and it's a very much a day trader's market, which I'm hoping, fingers crossed, that starts to play itself out a little bit and we get back into a market where we can hold positions for a period of days instead of a period of hours. Okay, so just some thoughts heading into next week. Again, I would like to see the market move to the downside. I think that's the path of least resistance at this point, and we'll see what happens. Let's take a look at some trades that were closed out last week. So let me pop up my main charts here. Okay, so like I mentioned off the top, kind of a mixed week. Okay, the markets that were moving, we saw some phenomenal returns, which we'll walk through in just a second. I had a number of names like Netflix and Google and QQQ and SPY and Apple. We had many charts where we saw trades trigger in, hit first targets. When we hit first targets on our chart, we moved the stops to break even, and we ended up getting taken out at break even on many of those trades. Okay, so unfortunately, we just did not get that follow through like I talked about. The follow through was for a matter of hours instead of a matter of days. So we just missed out on just a phenomenal week on many of those names. But we did book some really nice winners. So I'm going to jump across a couple of different names. We'll get to as many as I can here. I don't want to keep you around too long and get this video too long. But you'll notice here on the screen, these are a lot of the names that I personally trade on a regular basis. So I'm not going to go through a list of 100 names and pick out the best trades from last week, to try to show you the great returns. I'm going to look at the names that I trade on a very regular basis. The reason being, we want to get familiar. We want to create a comfort level with these stocks so we start to get familiar with how they move, how long a typical trade takes, what are the levels of volatility, what type of liquidity are we seeing in the options. Okay, that's by design that I'm not skipping around between dozens of names on a daily basis. I memean, these are the names that I have traded for the entire month of September. These are the names that I will continue to trade going forward because I know these names inside and out. It helps me as I start to get into live market conditions. I'm not just pulling up a random name off of a stock scan every day. I find it very difficult to be successful like that long term. So one of the names that we trade, this is symbol BA. Let me zoom into the chart here. And let me go ahead and move some of these notes out of the way so it's a little bit easier for you to see. Okay, so this is Boeing. We have this short setup here to the downside. What's great about these moves to the downside, everything escalates quickly. Okay, it's not like those moves to the upside where they grind and they take forever to reach targets, and the time decay and the volatility decrease, will kill your overall profit potential. These moves to the downside are great because, number one, the volumes increase, making it easier to get in and out quickly. On the moves to the downside, volatility typically increases. So if we're buying puts or buying put spreads, we want volatility to increase. That gives us larger returns. Okay, and then when we're buying premium, we want those trades to happen very quickly because we want to avoid the dreaded time decay. Okay, we don't want to hold on to those positions for days or weeks on end. We'd like to get out in and out very, very quickly. So this is a great trade for us. Let me get my data box up so you can see the details. Right over there. Drag it over. So we have this short trade. It's set up on the 23rd. Okay, you can see it triggered in on the 23rd. We are out the very next day. We are out in actually less than 24 hours of being in the trade. So the way that we play this position to the downside, can you short the shares of stock? Yes. Could you buy a put spread? Sure. Those are all valid ways of playing the trade. Could you play the weekly options? Yes. Okay, the way that I decided to play this, I decided to play the put options. I decided to buy some long puts. I decided to play the monthly options. I wanted to be a little more conservative just in case the market did stay choppy and this trade did take longer than expected. I did not play the weekly options. So I went out into the October monthlies and I bought the October 134 put. And I paid $360 per contract. Okay, so worst case scenario. If I lose 100% of my investment, I'm out $360 per contract. Okay, now of course it's a very liquid product. You can buy multiple contracts if you're trading a larger account size. Okay, I'm just giving you results based on trading a single contract, the smallest position size we can get here. Okay, now it's great that we were in and out in 24 hours. Wasn't anticipating that, but no complaints out of me. We came in the next day, sold out of the put option, booked a $345 profit, 96% return in 24 hours or less. I mean, just a great, great trade. Now, I often get the questions, do you hold on to the position longer? Do you keep a trailing stop in play, trying to capture the larger winners? I don't. As soon as my second target is hit, which is the second series of magenta colored dots here, as soon as that target level is hit, it's printing in real time for me. There's no guesswork. I'm out. Especially in this market that we're seeing now where there's very little follow through, I want to book those profits and move on as quickly as I possibly can. So it was a great trade for us. Never took any heat on the trade. I mean, it was one of those trades where it triggered in and it was off to the races. So we are now flat. We do have the potential for a long setup. 132.35 is that entry point. So what's great about the custom indicators here, heading into Monday morning, I already know what my plan of attack is on Boeing. I know where my entry point is on the long side. So, I don't have to spend hours on end staring at charts all over the weekend. I mean, I can quickly go through and see exactly what's taking place here and exactly what's setting up for early next week. So really nice return there to start the review. Let's move over to gold. We were expecting gold to be pretty active. We did have the Fed statement out. A lot of times those the Fed statement can affect the interest rate products. They can affect the metals. And this is GLD. This is the gold ETF that we look at. So we had this long setup. We talked about this in our training room. We needed a move to the downside in equities. Okay, and we did get some pretty decent volatility after the Fed statement. Okay, so originally we triggered into this trade. It chopped around for a couple of days. I mean, we had multiple opportunities in here to catch the trade. It was not like the previous trade that we just looked at where it triggered in and went right to target. I mean, you had multiple chances to catch this trade over a period of days. Okay, so this is more of a typical setup for us where, it's not a day trade. It's not a rush to get in. You had plenty of time to catch this move. So we knew exactly where our entry point was at, 108.34. We had our targets up, full target up at 110.72. We bought the October 107 call for $2.59, so $259 per contract. We were fortunate enough to hit that target. Sold it out for a $156 profit, 60% return. We were into that trade on the 17th. We hit target over on the 24th. So, obviously it took more patience here. Okay, we all love the overnight 100% winners, but that doesn't happen every time. So, am I going to complain with a 60% return over 5-6 days? Absolutely not. I mean, it was just a great trade there. Okay, the global ETFs remain pretty active. we're going to take a look at EWZ here. This is the Brazil ETF. My one issue that I have with the global ETFs, a lot of times when you're talking about Brazil and you talk about China and Japan and over in Europe, a lot of those moves can happen overnight here in the US. So these are products that will have overnight gaps. Okay, and you have to be aware of that. There's going to be times where you're going to miss trades. There's just no way around that. Okay, we'll talk about some gap situations here in just a second. So I still like trading these products. They tend to swing really nicely back and forth right now. I'm personally trading EWZ and EEM. EEM being the emerging markets ETF, and I've had some really nice success with them. So we had this short trade here. Go ahead and move those notes so you can see that a little bit better. All right, so again, we had our short trade. We had our entry point at 22.86. We triggered into that short. We bought the October 24 put, $178 per contract. So pretty reasonable. I mean, we're talking about a couple $100 to control 100 shares of this ETF on the downside. We triggered into this trade on the 18th. We hit full target on the 24th. So here again, that's a 5 to 6 day holding period. I mean, that's what we classify as a true swing trade. I mean, that's really an average holding time for us. Sold it out, booked a $222 profit, 125% return. Okay, that's a great trade, right? I mean, we're talking about putting these trades on, coming in a couple times a day, checking the positions, and then moving on with the rest of our day. So great trade there. We're now flat. We have the potential for a new short trade heading into early next week. We'll have to see how the market opens on Monday morning. We have to actually wait for this candle to close before we get this trade to become official. But potential there for a new short trade heading into next week. Citigroup, we knew the financials were pretty active. We talk about this in our training all the time. It's very difficult for the overall market to make a move without participation of the financials. So especially in a Fed-driven market right now, where central banks and Fed speakers are the main focus of everybody at the moment, you've got to focus on those names that can be influenced greatly by those events. So we're talking about financials. We're talking about some of the bond markets. TLT being the bond ETF. I mean, there's a lot of uncertainty right now, so you want to make sure you have some exposure. Even if you're not trading those markets, you have to track them, because those are going to give you the clues for the next big market move. So, we looked at the financials last week. We did finally get Citigroup to break down. This is a trade that we talked about in one of the videos early last week. Some of you may have seen. So we were just waiting for this trade to play out. It took a couple of days. I mean, we did trigger into this trade on the 18th. We did not hit target to the 24th. So you're starting to see a theme here where we're in a lot of these trades for 4, 5, 6 days. Those are typical holding times for us. So we bought the October 53.5 put, $198, $198 per contract. So again, we're talking about a couple $100 here. We did hit full target after a couple days of chop. We had multiple opportunities to get in sync with the trade if you didn't catch it initially. Sold it out. Booked $192 profit, 97% return. So just a really great trade there on Citigroup. And now we're just waiting for the next fresh setup into next week. So again, I'm not spending all weekend here, scanning hundreds or thousands of stocks. I mean, I know exactly what I'm waiting for. I'm waiting for my calculator to print a setup for me. So I don't have anything heading into early next week, but with as active as the financials have been lately, I would expect that to change there pretty quickly. All right, let me just quickly take a look at some charts and show you some of these break-even trades. You'll see here's Apple. We had this long trade. We were hoping that it was going to break out. It looked like it wanted to break out of this tight range that we've been in. Unfortunately, we did get taken out at break-even. So I guess it depends how you look at it. I mean, we were fortunate enough to hit that first target, allowed us to reduce some risk, and we did get taken out, and now we're flat heading into next week. So no harm done. I mean, we would love to have seen it break out to the upside, but just wasn't meant to be just yet. So we'll keep Apple on the list for sure, but nothing to do at the moment. Same story with Netflix. We did get triggered into a long trade, got taken out at break even. We also had this short trade on the previous setup. That one got stopped out. So, we're not perfect. We have losing trades here. The good part about the way that we trade on our winners, I mean, we talked about anywhere from 60 to 125% returns on the winners. On our losing trades, In a lot of cases, we're looking at between 20 and 40% on the losers. So we're still coming out ahead in the long run because our winners are larger than the losers. So unfortunately, we didn't get that breakout move on Netflix that we were looking for, but we'll definitely keep a close eye on that one next week. Google, here's another one. Looked like it was ready to break to the downside. We did hit first target here, got taken out at break even, and then towards the end of the week on Friday, we did get a short setup to trigger in. So I did get into a new put spread out in the October options, and so far so good. We've got a small profit on it. Haven't hit any target levels, but for my plan for early next week, target 637.05, 624.26. My stop at 659.29. So my plan for Monday and Tuesday is already in place. I already know exactly what I'm going to be looking for there on Google to start the week. QQQ, this is the Nasdaq ETF. We did get wiggled around a little bit last week. We had a couple of trades there, a couple of short positions. They both hit first target and they both got taken out at break even. So, I'm talking about this one right here. Okay, that one, it triggered in at my first magenta colored dot, came down, hit first target, stop, moved down to break even, and we were taken out. Same situation here. We triggered short, hit first target, and got taken out on the bounce. So now we're flat heading into next week, and we're just going to wait for the next fresh setup there on QQQ. SPY. Zoom in here. So on SPY, we had our short trade. Again, looked like it was ready to break down. It did hit first target on the first trade last week, got taken out at break even. Okay, so again, no harm done. It looked like we were ready to break down to full target. We just didn't have enough momentum there on the downside. We then, towards the end of the week on Friday, we had this long setup, but we had a gap from Thursday's close into Friday's open. We did have a gap, and we gapped up past the entry point. You can kind of see here. Here's the close on Thursday. Here's the open on Friday. You can see all of this open space here, and we gapped up past an entry point. When I see that happen, I do not chase an overnight gap. I'm going to wait for price action to pull back and get back towards that entry point. If I chase the trade, then I'm going to affect the reward to risk ratio. And I really don't want to have that happen. I want to be patient. If I miss a trade from time to time, that's perfectly fine. Because look at this example. Okay, especially on these index products, a lot of times they do not like to leave those gaps unfilled. Okay, so if I would have got in right away Friday morning, chased the gap, look what happened. Price action pulled right back. We all know what happened on Friday. Got a little nasty there. So I'm still not in this trade because of the gap kept me out initially. Price action pulled back. If we get back up to 193.72, if we rally back up Monday or Tuesday, I'm willing to get in sync with the trade. I'm willing to grab it at that point. But because of that overnight gap from Thursday into Friday, it helped me avoid the trade there on SPY. We've got very similar situations going. Let me zoom into TLT. This is the bond ETF. Very similar situation here as well. Okay, overnight gap from Thursday into Friday. I did not chase the gap. I never chase the gaps. It's just built into our trade plans. We always wait for pullbacks. So in this case, price action did pull back. Now I'm just waiting for price action to bounce back up. If we get back up to 122.44 early next week, I'm willing to grab the trade at that point. But I'm currently flat on TLT. Amazon, another one. Okay, you can see the system had this long trade. It did trigger in, but again, look at the overnight gap from Thursday into Friday. We gapped up past the entry point. I do not chase gaps. I'm not just saying that because it helped me avoid these trades that are losers at this point. My students have heard me teach this for the last couple of years now. It's built into our trade plans. We never chase gaps. We always wait for pullbacks towards our entry points. So if Amazon does recover next week, if we get back up to the entry point at just above the 538 level, I'm willing to get in sync with this trade, but I'm also looking at a potential short trade, 521.16. So we'll most likely be pretty active early in the week on Amazon. If it breaks down, we'll be able to react to grab a short trade. If we rally back to the upside, we can get in sync with the long. That's why I love trading a system like this, because we know exactly what's going to play out ahead of time, as far as jumping into new trades and knowing where entries and targets and stops are at. Just a few more. I know I'm running a little bit long here. couple of trades that are still going. We have CME Group, symbol CME. We are in a long trade, have hit first target. So the stop's been moved up to break even at 91.41. I have my ultimate target up at 94.07. I'm just waiting for this one to play out. So, worst case, I'm out at break even with no harm done here early in the week, next week. And then finally, Chesapeake. Not personally trading Chesapeake, but I do have a lot of students that are, so I thought I'd throw it in the list here. I don't like to trade the lower price stocks like this. It's only a $7 stock. I like to trade the higher price stocks. Just allows me more flexibility as far as what I can do with the options and what I can do with key level adjustments. So that's the way that I play my personal watch list. But you can see Chesapeake is in the short trade with targets at 668 and 596. The stop up at 843. So you do have the potential for a short there on Chesapeake. So that's some of the activity there on my personal watch list. All in all, a good week last week. It could have been phenomenal, with the help of some of those trades that got taken out at break even. If we could have reached some of those full targets, it would have been a phenomenal week. But no complaints out of me. Still a profitable week. Notice the VIX is still up at 2360. So we've seen the VIX stay elevated here the last couple weeks. That's good to see. That's going to give us a lot more flexibility heading into the next couple weeks. We could potentially put on some longer term position trades, some longer term short premium trades, which we'll talk about in next week's video. So just a quick recap from last week. Threw out some key levels for you heading into next week. We'll see what happens. I expect the activity to be high for the rest of this year. I think the volatility is here to stay. So great time to be involved in the markets. So I'm going to wrap up this video here. Again, if you're a Thinkorswim user, make sure you get in and update to the new platform release. I'll be back next week with a couple of videos walking you through what I'm looking at in my own trading, what we're teaching with our students next week. So look forward to seeing you guys next week.